Welcome to the Smarter Trading Podcast. If you want to sharpen your trading skills or become a more savvy investor, then you're in the right place. Every week, we sit down with professional traders who are ready to share practical insights on what it takes to succeed in modern day markets. Smarter Trading, the show to watch to trade smarter.
Evan Medeiros is the founder and CEO of The Trade Risk. All opinions expressed by guests are solely their own opinions and do not reflect the opinion of Evan or The Trade Risk. This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Evan and guests may maintain positions in securities discussed in this podcast.
Hello, everyone. Thanks for tuning in to another episode of Smarter Trading. I'm your host, Evan Medeiros, and today I am joined by Pat Walker. Patrick has been trading for over 30 years. He has had the privilege of meeting and learning from legendary traders like Martin Zweig, Bill O'Neill, and Ed Seykota. He was an IBD co-leader, and most importantly, he's a family man, happily married with 4 kids. He loves to learn, teach, and inspire. Pat, welcome to the show.
Oh, Evan, thank you for having me. I really appreciate it. I was excited and enthused when you reached out to me. I don't follow a ton of people on Twitter, but it was just really nice. I admire your work and I admire your persona also. You're not brash or anything. You just lay the stuff out there in a way that's really just kind of easy going, which I think is important in the area of from a psychological perspective for me in the area of investing is if a person's really amped up and everything, it's not conducive to good decision making. And, like I said, I listen to your videos and I follow you on Twitter, I endorse you, it's just, hey, look at this. Let's talk about this, which is, I think it's something really important. I'm grateful that I've learned from some good people, people that really, I've said this on videos and I'll say it on yours. Bill O'Neill changed my life. Honest to goodness, he really did. But before him, the guy who saved me was Martin Zweig. Because of him, my managed accounts were completely out of the market before the crash of '87 and missed the whole thing. So I'm grateful to have met him. What a kind, gentle man he was. And got to meet him a couple of times one-on-one and talk with him. So anyway, it's good. It's good. I enjoy, for those of you who don't know, and again, I followed Evan for several years, but the idea of like Evan does, teaching, just teaching. I taught on the university level years ago, and I taught advanced level classes, strategic planning, periodically advanced statistics. And my mantra is always this, and it kind of ties in with what you do. To know that 2 + 2 = 4 is knowledge, but to know why 2 + 2 = 4 is knowledge that you possess that you can transfer into other situations, which makes you in charge. It puts you in charge, not an ego thing, but it helps you. And so that is a big part of me, is not just giving ideas. A lot of people give great ideas, but then I always sit there and think, what if something happens to them? And I don't want anything to happen to anybody, but what if something does and they go away? Sure. Where are you? You're no better off than when you started. So to me, the foundation's got to be education, explaining why. And then you own the concept and you can apply it to your stocks. And I know that's what you do. And that's what I strive to do also. Just trying to help people while we can. That's kind of who I am, sir.
Yeah, that's awesome. And so you mentioned a few things there. First, you've been trading since the 80s, which is something to still be in your position, still smiling, still got hair on your head, right? Maybe not as much as the college days,
on the side.
You're still there. That's right. You're still there, and that's a huge testament. You've been in the game for all this time. So I'd be curious though. So you mentioned Martin Zweig, you mentioned kind of sidestepping the crash. Back in those early days, what were you thinking back then? How did you get right involved in the markets, and how did you meet Martin Zweig?
Great question. A couple of great questions. It's really kind of unique. Even when I was younger, I'm talking about like when I was under 10 years old, I was fascinated by stocks. I wasn't money hungry. It was just like, what's going on here? And I still remember watching Wall Street Week a long time ago with Lou Rukeyser. Okay. And I knew some of the people through that show also. I'm not going to mention names, but I did. Anyway, it was quite interesting. Just why do stocks do what they do? And I thought, well, it's simple. I'm just gonna go in there and study some charts and then buy stocks. But here's the kicker. All right. And now I'm going to really date myself. When I started back in the 80s, there was no internet. There were no real chart services. I had to dig, and I finally found one. It was called Trendline. And I used to get the Trendline charts. And most of you probably never heard of it. It's because they're gone, I think. But that was my first dip into it. But something really important happened to me. I was a broker and an investments advisor, all right? And I was starting to invest people's money. But then a really tragic thing happened, and this changed my life. My dad died. And my dad, who I dearly loved, owned a hardware store. And it was just your mom and pop hardware store. It was him and my grandfather. And he died. And my mom owned the business, but she wasn't the business person. And that's not a reflection on her, but that's just how she was. And it finally got to the point where she said, I think I'm going to sell the business. And, we talked about it, we prayed about it, and she sold the business. And she gave me the proceeds from that to invest. And you got to put this in context. I'm investing my mom's money. My dad's dead. This is it. She's got to live off this. And so, and she wasn't that old, by the way, either. Okay. She was in her 50s, early 50s. So what did I have to do? Or mid 50s. I had to get really, really serious with this. Put yourself in my shoes. I can't mess up. And so I was on a quest, and I started reading a lot more books about investing and stuff. As brokers, they just tell you to sell stuff. Well, I said, no, morally, that's wrong. I can't do that to anybody, any of my clients. So I read Martin Zweig's book, his first book, Winning on Wall Street. And it really opened my eyes up. And I started subscribing to his newsletter. And I give credit where credit's due. Martin Zweig was talking about in 1987, there's things happening here that don't look so good. And what I noticed is I was getting involved in charts, and I would have sell stops in on all my managed accounts on stocks. And every day, weeks before the crash, I'd get filled on sell stop orders, GTC sell. Okay, I'm being the broker there. Good till cancel sell stop orders. I'm going, gosh, I don't remember putting an order in. I was like, oh yeah, I forgot about there's Anheuser-Busch, there's General Electric. I was constantly getting stopped out of stocks for gains, but I was getting out. So picture this, and this is for everybody. Let's suppose you're managing money and you own 100 different stocks, and every day you're getting stopped out of certain stocks, not junk stocks either, by the way, quality companies. You're constantly getting stopped out. Well, you say, well, I guess I'll keep buying. No, the market's telling you something. So basically, about 2 weeks before the crash of 87, my managed accounts, and I had some accounts with doctors and things like big doctors, we were stopped out of everything. And just applying the simple rules of, hey, things are falling, don't buy, we were out. And I'm grateful. So, I'm really grateful. My managed accounts, ourselves, we completely missed the crash of 87. We were out well before then, and we just stayed out. And you can say, well, then Pat, what'd you go in? The crash happened. Did you buy right away? No. See, then it becomes an ego game. What was I waiting for? I was waiting for things to settle down.
The amount of responsibility that dropped on your shoulders back in the tough start after hearing the news, having, your mom give you this money. That is an incredible weight for anyone to burden, let alone someone that's, fairly new to trading. So
Yeah.
that, I think, I guess I'd be curious. It's a motivator, I'm sure, but I think back to how I started. I had a full-time job. I was I was making pretty good income as a software developer, so I had discretionary money to lose, and that's good and bad because sometimes you don't take it seriously enough. But I guess I'd be curious, any thoughts in terms of that pressure, that motivation? What was going through your head when you kind of back in those early days? Just because I think that's a pretty significant point.
Yeah. Well, it hits a real nerve with me. I was really close to my dad, and it was the worst day of my life. And I love that man dearly. And in true confession, I'm closer to my dad than I am my mom. And so there was a lot of tough dynamics there, but I knew that I had to really get serious about it to help her. And so, like I said, that's when I really went on the vision quest and realized I need to, I have to do a good job. It's like in the movie, failure's not an option here. I couldn't. But I want to dovetail off on that a little bit because I think this is really important. And I'm not trying to, preach here or anything like that, but just something I encourage you all to do is, and you can say, where the heck's he going? Take care of yourself. And you can say, what kind of lame stuff is that? No, I'm really serious. One of my one of my degrees is in psychology. And so I'll just share this with you. This is advanced stuff, but the people I had, the doctors I had really, really challenged me. And I had a doctor and he took me aside and he said, I want you to do something. He goes, I want you to look at your hand. And I'd like you all to look at it. And this was him and I one-on-one. And this guy was a renowned psychiatrist. I can't tell you his specialty, but it was pretty bizarre. And he said, I just want you to look at your hand and move it. Note the joints, note the tendons, note the muscles, twist it. And then he paused and he said, I have to tell you something. That hand you're looking at, you're going to be buried with it. It has to last a lifetime, yours. So by default, and I'm not trying to be a downer here or anything like that, I challenge each of you, take care of yourselves. I've outlived my dad. I've outlived him. And again, you can say, this is a downer. No, this is an upper. I'm challenging you. Take care of yourselves. Go out and grab it. It's there for you. All right. And you can say, what did we do? We're talking stocks. Folks, I'm going to share something. If you're sick, it ain't going to cut it. So we take care of ourselves. And that's something important.
Taking care of yourself is great advice. So you made it through that tough period. You survived the crash of 87. You continue to trade and learn. Talk to me about how you approach markets nowadays and some of the key factors that you look at.
This is a fun game, folks. All right. And yes, it's a business. All right. I'm going to be serious. Okay. I don't mean a game like let's play Monopoly. All right. But approach it seriously, but don't let it kill you. All right. And one of the things you have to do, what we all have to do, limit risk. Limit risk. Here's a quote for you. I'll believe in what I see and not in what I believe. I had that quote taped to my monitor for over 20 years. Who said it? Dave Landry. All right. He's got another great book. I've never met him, but he's a great guy. Humble guy. Dave Landry. Oh, by the way, please, I've never met him. Okay. I don't get anything. Nothing like that. I'm just plain old Pat Walker talking. But focus on what's happening, not what you think should happen. Completely lose bias. All right. Opinions don't pay. I say this all the time. Opinions don't pay. Forecasts don't pay. Analysts don't pay. Brokerage houses don't pay. Your broker doesn't pay. Your financial planner doesn't pay. Your partner doesn't pay. None of it pays. All right? One thing pays, price. That's it. So what do we have to do though? Combine two variables together, and actually three. Price and volume. I can't stress that enough. I say this a lot and I'll say it again. People talk with their mouths and vote with their pocketbooks. Go where they're voting. All right. I'll never forget, I had a buddy of mine I traded with out in California. He worked on a trade desk. He goes, Pat, his name was Robert. Pat, man, I found a pattern. It's awesome. I said, well, buddy, tell me about it. He tells me about it. He said, we're going to kick butt with this. He goes, and here's the best part. Nobody knows about it. It'll just be ours. I said, well, gosh, if nobody knows about it, they won't act on it, will they? He says, no. I said, well, if they're not acting on it, ain't nobody else going to buy it. We want everybody to see what we see. True? Folks, charts are a reflection of human emotions. As I said, fear, greed, panic, complacency. Look for chart patterns that everybody can see. Clean and simple basing patterns. All right? And this is the important part. When you see that pattern, it should be very easy. It should be so easy a fifth grader could see it and draw it. When you see that pattern and refine it, and there's only a few of them you need, there's one other variable that's important. When it's pushing through that pivot price, look for volume. Look for volume on the hourly, the 30-minute, and the daily chart. Fine tune it down to the 30-minute and the hourly, right when it's approaching the pivot price. This is the real world, by the way. This isn't textbook, okay? This is a guy who's been in the trenches and had to do it. I'm supporting a family of 6 and help my mom. I had to do it. Look for those. Look for those. And look for that volume surge. When you see that volume surge, you know what it tells you? Hey, other people saw what I saw, man, and they're hitting it. Is that sweet? That's, that's sweet potato pie. There you go. I had to say it. Evan's smiling. No, go for that. You like that? And if it's not there, it tells you, maybe something's wrong. I'm the lone Marine on the beach. That ain't a good place to be. All right? So look for that volume. No volume, no buy. And another point I'll make here, just tidbits of, I guess, wisdom through years of doing this. Never let a good profit turn into a loss. Never. Cardinal sin. Don't do that. Okay? And then I'm also going to say this. And I'm not telling you what to do, but I encourage you, if you can, don't get wrapped up in day trading. Here we are in March. I'll tell you, honest to goodness, I haven't looked at a 5-minute chart this year. Okay? And you can say, he's probably looking at 4-minute charts. No, I'm not. No, none of that stuff, okay? Okay, 3-minute. No, none of that. Look for bigger picture patterns that everybody can see. And then you look for that volume confirmation. Focus on volume coming in there. Like I said, it means other people see what you see and they're acting on it. That's huge. Focus on clean and simple with volume. But I want to bring up another constraint for you that will really help you. And this is straight from Bill O'Neill's research. And I will tell you this. Yeah, I've had lunch with the man twice and sat down with him. That man changed my life. I'm telling you right now, credit where credit's due, he changed my life. His combining of simple technical patterns combined with fundamentals. And here's their research, and I'll share this with you. In fact, I got it right here. Look at this. You're going to love this. Here we go. There's a break here from August. This is very short, by the way. August 2007 through October 2007, the market was in a confirmed rally. Investors Daily identified 39 breakouts. Okay? I'm going back to 2007. 39 breakouts. 39 clean and simple breakouts. Let's rock and roll with this. You ready? The top performing 10 stocks did 4 to 10 times better than what the market did. Ain't that what you want? Well, I'll tell you what I'm looking for. I just want to do as good as the market. What? Yeah. If the market's up 10, if I'm up 10, I'm happy. Oh, come on. Let's go for it, right? I'm going to say it again. Top performing stocks. 10 stocks did 4 to 10 times better than the NASDAQ's 11.5% gain. The NASDAQ was up 11.5%, and 10 stocks did at least 45, right, to 110% more than what the market did. Ain't that what you want? This is the sweet potato pie part. All of it had a composite rating of at least 96. Is that great? You'll like this part too. 8 dwelled in the top 30 groups out of 197. See, we quantify things. Again, that's the statistics in me. Put an edge in your favor. Here's some facts for you. Focus on stocks in the top 30 to 40 groups. Okay? There's 197 industry groups. Look for the best of the best. Don't buy any low price stocks. $10 and higher. Okay? Buy stocks that trade at least 200,000 shares a day. Buy stocks with a composite rating of 90 or higher, preferably higher. Focus on stocks with a relative strength of 88 or higher, 85 or higher. Focus on stocks with an accumulation distribution of A or B. Focus on stocks, as I said, within 20% of 52-week highs, and they're in the top 40 or 50 industry groups. If you take that, you know what I call that? That's a recipe for a good cake. If you take that and put it to use, you will find winners. Guaranteed. But here's the last point I have to make, and I can't stress this enough. You will be wrong. You will have losses. There's only one person who never had, two people that never have losses. One is the person who never invests, and the other one's a liar, right? You're going to have losses. Yeah. But if you focus on a clean and simple base breakout, guess what? It's good above the line and it's bad below, which keeps losses much smaller. Another point I want to make here, I know I'm rambling, but I need to share this. I encourage you, please, I'm not telling you what to do. Stay away from day trading, okay? The 5-minute charts and stuff can just chew you up. You know what's maddening? And I know this because it happened to me. I'll buy a stock. This is years ago. I'll buy a $25 stock and it goes up to 27, 28 bucks. Man, I'm up 10%. Kick butt, let's go. I'm selling. And I sell. And the stock goes up to 29 and 30 and 31 and 35 and 40, and I can never find a way to get back in. And I bet my life on it as I sit here talking. People listen and go, yeah, that's happened to me too, man. That sucks. That ain't no good. Yeah, don't do that to yourself. Don't sabotage yourself. So how can we do this? Because a huge part of this game is psychology. How can we help minimize and not sabotage ourselves? You can say, well, I want to sell some. Go ahead. Don't sell all of it. Just sell 20% if you have to. Picture this. You buy a stock and it goes up and you sell 20% for a good profit. Okay? And I'm not talking 50 cents. Don't get wrapped up in that game. You sell it for a good profit, maybe 4 or 5 points. What can you do? Those last 80% of shares that you own, you can say to yourself, if it comes back to my price, I'm selling. Picture this. If you do that, do you know what that means? The worst case scenario, the absolute worst case scenario, you made money, right? Do the math. You made money. Do that. The other side of the coin, and this is the psychology part, by selling just a little bit, you can relax because, as I stated, you know you've made money. If you know you've made money, can you not let those other shares work a lot longer for you? And that's where trend following comes in. Let it trend on the 50-day or the 21 exponential moving average, or I use the 8-period exponential moving average, which I'll just share this with you. Why the 8? A good partner of mine, I'm not going to mention names, he's a very, very good trader. Very, very good. And one of the best I know. We did a lot of work after I met Ed Seykota. Does everybody know what Ed Seykota uses? Ed Seykota uses the 5-period exponential moving average. I'll be honest, one of the biggest mistakes I ever made in my life, him and I were talking one-on-one, and he leans back with his bifocals. He goes, that's very interesting. Would you like to do some work on that? And me being the idiot, I didn't follow up. Hence the hair loss, huh? So anyway, but he used the 5-period exponential moving average. But one thing a lot of people don't know, Ed Seykota traded commodities. And here's something you may find shocking. I did. I found that by and large, most of the stocks are more volatile than a lot of the commodities. I was using the 5 EMA. I was constantly getting stopped out. So then I switched to the 10 EMA, and it was a little too loose for me. And my partner and I, and this is 2 years of data, by the way, folks. This isn't like, oh, they reached a decision in a couple of weeks. No, this is 2 years of hard study, 6 to 7 hours every frickin' day. And what did we find out? The moving average that worked the best. And by the way, you can say, well, when was this? Was this last year when everybody else talks about the 8? No, folks, I'm going back to the turn of the century. I'm going back to 1999 and 2000 was when we were doing the work. And what did we find out? This is what we found. For us, the 8-period exponential moving average for trend following on a shorter term basis is wonderful. So that's what I use. And it's on my charts. When we look at the charts, I'll show them to you.
There's so much information there that I hope people rewind and listen to. I mean, the goal that Patrick shared on just curating the stock lists in general, top 30 to 40 industry groups, comp rating of 90 or higher, RS rating, like that, it sounds so simple. It is simple. But I think, especially as a new trader, you're looking for something super sophisticated, or it's got to be more than that. And those are the things that has kept has kept Pat in the game for all these years, and they work, and the data supports it. To look at strength, stocks that are leading, that is one of the big secrets. And I love, and it's funny because we didn't talk about this prior. I am so on the same page as you, Pat, on the day trading. I day traded a lot when I started. That's how I came into the game, and it just aged me so quickly and fast, and it pretty much drained my account at the same time. And I learned a lot. I really did. I learned a lot about the risks in the market and price action in general. But every year that goes by, I just want to increase my time frame. So, but anyway, I want to get to, we're going to look at some charts here in just a second. But I am curious because you brought up a lot of that good criteria, and you use this term of a max list. You are sharing that often on Twitter and in your videos. What is a max list, and what is a max list stock?
Through years of study, and I mean decades, there are core groups of stocks that institutions have to own. Think about this, folks. You own a growth mutual fund, and you go through the prospectus, and you look and you go, they don't own Apple, and they don't own Amazon, and they don't own Google? Are you kidding me? Really? These are the big name institutional stocks, franchises. This is what I say all the time. Nobody does what Apple does as good as Apple does it. Nobody does what Google does as good as Google does it. Folks, I ask you a question. You're going to do an internet search. Well, let's go on Bing. Are you kidding me? No. You go to the franchise. You go to Netflix. Automotives in the automotive sector, Tesla, MAXLIST stock, Google, Facebook. Nobody does what Facebook does as good as Facebook does it. Nobody does what Twitter does. And I'm not endorsing you buy them right now, and I'm not getting political with all the stuff going on. That's not the issue. I put all that aside, all right? Big names that big money can move into. NVIDIA, big money can move into that stock, all right, or Goldman Sachs, and not cause a ripple. And big trends develop there, and they trend beautifully on the moving averages, and you just let them work and work and work. Just let them go. This is the beautiful thing. You can buy one of those things and it'll trend. You don't even have it on your front page. I don't even look at it. I have a limit alert set, a price alert, but I just let it go. Maybe I'll look at it once or twice a day. And now I'm going to back up here and say this. That's the max list, okay? Apple, Amazon. Well, here, hold on a second. I'll go to the other one. I'm going to read them to you. How about that? The joys of modern technology. Here we go. Apple, Amazon, Alibaba, BABA, Baidu, Facebook, Google, Goldman Sachs, Netflix, NVIDIA, Square, Tesla, Twitter, Visa, MasterCard, and I'll stick Microsoft in there too. Big names, big names. Now I have to pause here and share this with you. Please don't take that as that's an endorsement to go out and buy them all. No, I'm not saying that at all. But at certain times, they provide a great setup on the daily and weekly charts, and sometimes monthly, where huge money can be made. Huge. We had a client, and he didn't have that big of an account, but Tesla had a great pattern. And I'm going back over a year ago, okay? And his account wasn't that big, and no day trading. He rode that sucker. He made $1 million on Tesla, letting it work, letting it trend on the moving averages that I cited. So that's the max list. Now I'll take it a step further. Is in that same realm, there are a couple of ETFs that I really like. All right. I like the spiders and I like SSO. I like SSO better because it's 2-for-1 leveraged. And you own the entire S&P 500 with leverage, but you're also diversified. I love QQQ And I love QLD. Love it. Own the entire NASDAQ 100. You know, all those stocks I just mentioned, I think all those are in the NASDAQ 100. Most of them are for sure. You own the entire NASDAQ 100, the power stocks, the MAXLIST stocks with 2-for-1 leverage. But you also have diversification. I'm going to pause and share this though. I'm not telling you to buy them now. No, I'm not saying that at all. But just do your homework. Do your homework. You can find great patterns. We had Alibaba last year. What a move. What a move. As I said, Tesla was more than a triple. Okay. And it just trended. It just trended nicely.
I think what I love about your process, and I think we both share this, is it's something that we can easily understand. And you are, if I had to sort of summarize here, you want, these high growth, very reputable leading status type stocks, and you're looking for quality patterns through supply, demand, price action, and volume to emerge. It's good quality stock, good quality pattern, and that's your jam. And I love that. Now, I do want to and I want to tie one thing that you said earlier is you talk about letting it ride, and you and I can say and talk about letting it ride and that Tesla move, the Alibaba move. That's a hard thing for a trader to do. I know personally, I mean, now I'm going to sit down, lay down on the couch, and you can be my therapist here, because letting it ride is a really tough thing to do in the moment. And I think this is why earlier you said you need to take care of yourself and you need to get sleep and treat your body well, because this ties into that realm, is what I'm guessing. So how do you let these things ride? How do you actually make this look so easy by sitting in these stocks?
Good question. That is a profound question. And it is the struggle that we all face, or we have all faced. And true confession, God knows I have too. I have too. And what really hit me hard, folks, I'll tell you this, true confession. Again, I was a sole supporter of a family of 6 and helping my mom too, who was widowed. And it used to drive me nuts. I would lose sleep over this. And this is the honest to goodness truth. I would have a stock and it would go up and I'd make, 10 or 20%. And I'm going, man, this is great. I'm locking that sucker in and locking in a great gain. And it would keep going and it would keep going. And I could never, ever find a spot to get back in. And you're looking at the chart every day. It ate me up alive. I said, again, my trading partner and I, back then, we were like, I'll say his first name because there's no big. His name's Chris. I was like, what the heck? I'm literally sabotaging myself. I am self-defeating myself. Think about it. I've limited, we talk about limiting losses. I've limited profits and I can't find a way to get back in. I found it, I won't say depressing, but I realized I've got to fix this. Or if not, this is not going to be good for me mentally. This is not going to be good for me emotionally. This is not going to be good for me financially, because I can't find a way to get back in. So then guess what happens, folks? And I bet money, many of you have been through this. Well, heck, I don't know what I'll do. I'll find a spot and I'll buy it. I'll capitulate and buy it. And yeah, I'm really good at that. You know what? I got that down to a science. I can always buy within 50 cents. You know what I'm going to say. I can always buy within 50 cents of the top. I got that down, man. I'm going, what? I need to have the word stupid tattooed on my forehead. I was like, what are you doing? So I finally said, no, I'm not going to do that. And I credit where credit's due. Chris helped me a lot. And Ed Sekoda really helped me. He challenged me. Whoa, did he challenge me on trying to determine a viable method for letting it work. And that's where it comes back to it, Evan, and for everybody. The 50-day, the 21 exponential moving average, the 8-period exponential moving average, let it go. Just let it go. Sell some into strength. Take 20% off. Take 25% off. If it keeps going and it starts to get a little choppy up there, sell another 20 or 25%. Keep the other 40 or 50% or 60%. Keep it. Let it work. And this is something I do too. And you said, really? I'll have a limit alert put, not a stop. I'll have a limit alert put, but I'll take the stock and take it off my front page so I don't look at it. I don't even look at it during the day. Don't even look at it. Why? I have a limit alert set, a price alert, not a stop. I have a price alert. Just let it go and see where it goes. You will find, honest to goodness, you will make more money with less stress than looking at it every day. And I'll say it again. Please don't get wrapped up at looking at 5 and 10-minute charts. What looks like a disaster on a 10-minute chart is nothing on a daily or a weekly chart. It's nothing. If I had been looking at 10-minute charts, there's no way I would have ridden Tesla the way I did. There's no way I would have ridden NIO the way we did. NIO was a quadruple. Leading group, leading stock, simple base, 15 to 60. Just let it go. Let it go. And it works. So, and I'll be very honest, I know I get passionate about this. Honest to goodness, folks, I wish there would have been somebody that would have said that to me a long, long time ago. I'd probably still have hair, but anyway, that's a different story.
I love the little mental hack of taking it off the homepage or the front page of your screen and just setting the alert. That's such a good, and it speaks to someone that has been doing it, right? This isn't an academic talk, or this isn't a high level like text, these are the types of pieces of information that I think is just the real gold, because it shows, how traders actually make this happen. And sometimes you got to trick the lizard brain a little bit and just not let you see the dollar signs on what you're up or down. So that's great. Thanks so much for sharing that. It reminds me. So you have a quote that you like to say often, which is, "Don't impose your will on stocks." Can you actually take a second and kind of tell me what that means to you?
You bet. That is a great question. See, this is one I know. I'm talking to a guy that does this and does this successfully with Evan, and I'm not saying that to play him up or anything like that. No, only somebody who's really done this, really sat in the chair and gone through it, knows what we're talking about. So it's a great question. Yeah, impose your will. The stock, I'm going to get a little deeper here. The stock is not a living entity. It's not an animal. It doesn't know you exist. It's not even alive. It's literally a chart, reflection, human emotions. As I stated, fear, greed, panic, and complacency. And what do we have to do? We have to accept that fact and let the chart tell us what to do, not what we want it to do or what we think it should do, but what it is doing. As I said, I love this quote: "I'll believe in what I see and not in what I believe." Banish this thought, please. It just has to go up. Why? Because it's a great stock with great numbers in a great group and it has a great chart? No, it will go up if it goes up, not because you think things are good. Let it tell you what to do. And by so doing, you've lessened stress and emotions. You're letting the chart action guide you. And that helps us a lot. Just simplicity. And, the quote, "Only the still pool reflects the stars." Think about that. Only the still pool reflects the stars. If we focus on simple, we breathe easier and we can ride trends a lot longer. And if we sell a little into strength, we know we can ride them even longer. So anyway, that's what we got going on here. Am I ready for Google? You bet I am. I don't know if it's going to go. I'll say it again. Let the chart action guide you. Don't again impose your will. Wait till it shows that it's pushing through that spot before you buy. And again, you're looking at that chart. 3 days now, people thought when it hit that white line, man, this is it. And guess what? 3 days, they're getting hit a little bit. You can see, well, today the stock rallied up and hit 2113 and it closed at 2083. That's not that bad. It closed at its midpoint. Yeah, that's right. I'm down 30 points. And God only knows what's going to happen tomorrow. Why do that to yourself? Wait for the trigger, even if you pay up a little bit. Oh, which leads to a good point here. Folks, I encourage you, use buy stops, use sell stops. I always tell people, and you'll see it on all my charts. I have white lines drawn. This is what I always tell the VIPs. It's good above the line and it's bad below. Price is good above the white line and it's bad below. That's it. That's it. Run it that way. And you'll do better. You'll just do better. And I also will say it again. Please stay away from the 5-minute and 10-minute charts. Please focus on bigger picture stuff and ride them as long as possible. Anyway, I know I say that a lot, but like I said, I wish somebody had said that to me years ago. Patrick, what are you doing? You're sabotaging yourself. Don't. There you go.
That's awesome. So much wisdom. So, Pat, we're going to start to wind down here. And I'm curious, a little bit of a curveball sort of question, and take a moment if you need, but what does successful trading look like to you? What does it mean for you to be a successful trader?
And that's a deep question. It goes far beyond the money. If you're focused and fixated just on the money and nothing else, it's not as satisfying. It's great. It's great, but there's tremendous satisfaction in good execution. I find being successful means I have a set of rules and tactics and discipline, and I'm going to stick with it. I know it works. I've lived with it for a long time. And you can say, Patrick, I haven't. Okay, that's fine. But you're learning. Every day you're learning and you're getting better. Okay, so what does successful mean? Yes, I know this and I can live on this and sleep on this. If I follow my rules, and for you, if you have viable rules, okay, that's first point. If you don't have viable rules, you're in trouble. That's why we're doing this together with Evan, because I know he has viable rules. If you have viable rules and tactics and discipline, and you stick with it, through time, you will be successful. It will work, but you got to have those constraints working for you, folks. And it's like a 3-legged chair. Got to have all 3 of them supporting it. If one falls, all right, you can have the best rules. But folks, if you don't follow them, it won't work. There's something really satisfying in that, though. And again, don't just focus on the money. Focus on following the rules, the viable rules and tactics that will help you. And it's extremely satisfying to know, okay, I lost on this stock, but I followed my rules. Or I made money on this stock and I followed my rules. It's wonderful, which leads to a point, and a good segue right here. There's a lot of great books out there, folks. This is a book that I've read, I don't know how many times. It's a book by Jack Schwager called Market Wizards. And Evan, I see Evan nodding his head. I know you've read that book. It is a great book. I encourage, there's the new Market Wizards, there's stock market wizards. They're all good. But I encourage you, if you want to get better, read and study Market Wizards. But the most important chapter that I found in that book is the last chapter with Dr. Van Tharp, T-H-A-R-P. And he trains and coaches. He's either a psychologist or psychiatrist. I don't know which, and there's a difference. He trained and coached successful investors and traders how to get better. He trained and coached unsuccessful traders and investors on how to get better. And that book really helped change my life because, again, I was sabotaging myself. He said you could have two different people. One says, one group or two groups. One said, see the signal, feel good about it, and do it. The other person or group says, see the signal, feel bad about it, and say you might lose money, don't do it. Both looking at the exact same chart. So by default, what should we do? There are opportunities out there all the time. When I was teaching on the university level, the department head said to me one day, and I'll never forget this, he was a doctorate also, said to me, there are no problems, only opportunities. There are no problems, only opportunities. I love that mindset. There's opportunities for us. If we have the discipline, if we know what to look for, and if we have the discipline to wait for it, and if we have the discipline to ride trends, and if we have the discipline to limit losses, we'll be in control and not the stocks and not the markets and not some analyst. You can run it that way. If you combine those components together, you'll be successful. And then I also have to share this with you, and I'm sorry if I'm going a little long. Please, all of you, maintain your humility. All right. I have found that when I get cocky and arrogant and think that I'm hot stuff is when I've always suffered large losses. None of us are infallible. Okay. The only thing that's infallible is the market. Okay. Well, God too, but the market, God first, actually. But just get in line with what it is. Ride it for as long as possible and always limit losses. You can say, gosh, you've said that a lot. Yeah, because I know what it's like to be down 6 figures in a stock. Okay. I know what it's like to be down hundreds of points in a stock. It's awful. So, which leads to I'm going to wrap this one point up here. Please always limit losses. Always. Find a clean entry. A clean entry gives you a clean exit. We just looked at some charts with white lines on them. Folks, it's good above the white line and it's bad below. And something you will find after looking at millions of charts, which I have, you will find, and I'm not exaggerating, you will find it's good above the line and it's bad below. And that'll help you. Anyway, mindset, big part right up here, good buddy. Anyway, I hope that helps, Evan.
It was extremely helpful. Yeah, that was great. I love we just got so much today. We got strategy, we got the stock selection, we got a lot on psychology for traders to think about. It all comes together and it's all needed, right? To sort of survive and to thrive in the stock market. So I think you said it nicely. You've got some great quotes, great reminders. I'm sure people are going to be rewatching this and going back. At least I hope they are, because I came away with notes myself and I thought this was great. So before we wrap up, anything that is on your mind that we didn't get to talk about, or just any other kind of closing thoughts here to kind of summarize this power hour?
Yeah, sure. You got it, buddy. Thank you. First off, Evan, thank you for having me. I was really honored when you asked me. For those of you that know me on Twitter, I don't follow a ton of different people. And there's great folks out there that I don't know about. I'm not criticizing anybody. I'm not going to get in that game. But Evan's one of the few people I follow. And the reason why is, and he's not paying me to say any of this stuff, because I like his work. You know why I like his work? Because it's conceptually simple and makes sense. Okay? It's not hocus pocus. All right? You could sit there and listen and go, oh, okay. This does make sense. I understand. So he does good work. I just wanted to share that. I appreciate what you do. And I'll also tell you this. I'm a pretty blunt guy, okay? Is if I didn't like your work and I didn't like how you did things and I didn't like your persona, I wouldn't be talking with you today. Okay? It's just the polar effects. But you're good. You're good. You got good stuff, good solid stuff. So I wanted to share that with you. Folks.
I appreciate that.
Oh, it's from the heart. I'll share this with all of you. This is a hard business, all right? It really is. And I'm not saying that to push you away, but it really is. But, it's an extremely satisfying business, not just financially, but also psychologically. It's like you're your own boss. Think about that. That's huge. You are in charge. So focus on saying, I want to be the best version of myself that I can be. I'm going to work really hard. I've picked up some more tools from Evan and from Pat that I can utilize. I will focus on clean and simple. I will always control risk. I will always ride trends as long as possible. And maybe this sounds corny, but I will be thankful and I will be humble. I will be thankful and humble. So just putting so many different facets of life together is because it's fleeting and it goes fast. I've seen it too many times in my lifetime with things of friends that are no longer here. So just balance in life, and maybe I'm harping here, but I'll tell you this, please. And I say this to the VIPs all the time. Take care of yourself. Take care of yourself. Eat well, rest, exercise. One of the best things you can do, folks, you say, well, this is crazy. This is about stocks. No, I'll tell you what, if you're sick, you ain't going to be doing much with stocks, are you? So you're not going to be doing much with anything. So a great thing, go out there and walk. Go out there and exercise. Get away from it. Do other things and be involved with other things where hopefully you're engaging with and you're helping other people. And it doesn't need to be in the realm of stocks, but just something while you're here. We're here for a short time. Let's make our lives better. But if we can make other people's lives better, then we've done something that's really good. Oh, here's the last thing I'll share with this. This is one of the best parts about Twitter. You ready for this? Here's your quote. Strangers are friends you haven't met yet. Think about that. Strangers are friends you haven't met yet. You want to know something really cool? 3 years ago, I didn't know Evan. I didn't know him. Didn't even know he existed, but now I do. Isn't that great? So we can use social media to tear each other down, but we can also use it to build each other up. Not in a false way, but in a real way. And isn't that a good thing? I'm going to use it. Life is choices. I'm going to choose to do that, and I hope you do too. Help other people. And it can be not in the realm of stocks, just in life. So I got off on a tangent, but you know what? That's the real deal. And that makes life worth living. So anyway, but Evan, I thank you so much for your time and the opportunity. I appreciate it. This is great. This is great. And I had no caffeine this afternoon. How about that?
Well said, Pat. Man, I don't know if I want to see you with caffeine. I don't know what that looks like, but I'm sure it's fun. Pat, where can people find you if they want to learn more just about you, your work, what you're up to? Where should people go?
My name is Patrick Walker, and it's missionwinners.com. And you can say, what does that stand for? Okay, I'll share this short and sweet. Mission, markets, industry, sector, stock, institutional support, outstanding management or outstanding product or outstanding service. And the last one, and I credit my son, never say never. Never say never. And I like that mindset. Never say never. And he's the guy that's jumped out over the Alps and he went camping in the Sahara Desert. I said, why do you want to do that? He said, because I don't know anybody else who has. So he went by himself into the Sahara. There you go. I don't know where he gets that from. But anyway, so that kind of wraps a lot of things up.
Thanks so much, Pat, for being here. And folks, all the notes and links from this episode can be found on the blog at thetraderisk.com/blog. Thanks for tuning in, and we'll see you in the next episode.
Thank you, Evan. So I was starting to give seminars to a big room of brokers about how to read charts. No day trading. Folks, this is a beautiful thing, all right? Back in the late 80s and 90s, there were no computers where you could look at 5-minute charts. So it was actually a blessing. I didn't get wrapped up in day trading or any of that stuff. So I was able to explain charts and just simple patterns. By the way, at that time, this was before I read Bill O'Neill's book. I hadn't heard of the cup and a handle. Well, then a good buddy of mine, Steve, says to me one day after one of the meetings that I had given, he comes up, he goes, and I didn't even know the guy. He says, hey, that was really good. He said, have you ever heard of Bill O'Neill? Oh, no. He said, man, you got to get his book, How to Make Money in Stocks. Okay, so I got it. I still have that original book and it's a hardcover book over here on my little credenza bookcase. And I'll tell you the truth, I've probably read that book and all the following editions, and I'm not exaggerating, and I don't think I'm stupid. I've read that book 40 times. It's marked up, it's dog-eared, I tore it apart.
Now, for you folks, Bill O'Neill is, just to give some context in case you're not familiar with that name, he is the founder of IBD, and he started the paper back in 1984. He authored the book, How to Make Money in Stocks. He's authored many books, and he came up with that Can Slim strategy, a lot of which we all still use and adopt of nowadays, basically, to invest in the market. So take it away, Pat.
So you get a kick out of this. I'll hold this up and I hope it's clear. Tell me if this comes across clear if I hold it steady. This is how bad I've got chart books going back to here.
Oh, that is awesome. Yep. We see it.
1993. And you can say, man, that's a long time ago. You'll get a kick out of this. Look at this. It's a Daily Graph book. You see that?
Oh, wow. Look at that.
How about that?
Collectible.
1989. And folks, I'll tell you this. I won't flash them. I got these suckers marked up. You can say, why? Because you got to remember, there were no computers with charting. There's nothing like you all have today. I used to. Okay, so you're going to go, man, he is old. Don't say that because it'll make me mad. No. I used to draw charts on graph paper by hand. But you know what was really great? First off, I couldn't complain about it because I didn't know a better way to do it. So that was there were no computers like this. There was no charting. There was no companies out there that did it. Okay, except if you got the chart books. But I saved a lot of those charts. And folks, I'll tell you something. I know other good investors that have saved old chart books and made logs out of them and studied them. I have old charts that I drew from a long time ago that I studied through the years. You want to really know a chart? Instead of just looking at a chart on a piece of paper, but on a computer, draw the sucker. Draw it on graph paper. You really can see and feel the movements in the chart. Open, high, low, close on every bar. Anyway, I know I went off on a tangent there just a little bit, but all those things really helped me. So something I encourage all of you to do. And my philosophy is always this. And I have all these quotes stuck in my head. So here's my quote for you. Be the person you needed when you were a child. I'll say it again. Be the person you needed when you were a child. And at one time, folks, we were all a child in this business of investing. Help other people with it. Before you can help other people, really do a cold, hard, critical analysis of yourself. Find out what works. Immerse yourself deep into it, and periodically just turn off the noise and study the charts. Charts are a reflection, I'm going to say this, charts are a reflection of human emotions, fear, greed, panic, complacency, and it's all reflected in price and volume. You can see it. And when you see those patterns form, you can quickly start seeing where it's like this, and then it just settles down. Everybody calms down. And then all of a sudden, what happens? It bursts through the top of that line and explodes in price. If you look for chart patterns that everybody can see, it increases the odds that they will buy also. And isn't that what you want? Now, how is that going to be measured? I will tell you, it's measured by price movement up, but volume. People talk with their mouths and vote with their pocketbooks. I'm telling you what, folks, look for those volume surges. What's it telling you? It tells us that other people see what you see and they're acting on it. Isn't that what you want? That's what we're after. And one of the first patterns that really helped me, Evan, was the, and I know you use it too, is the cup and a handle. But I'll also say this. And I was an IBD meetup co-leader for 12 years. Like I said, I've had lunch with Bill O'Neill twice. We've sat down and talked one-on-one. Just going to say this. If you wait for the cup and a handle, you're going to starve to death. It doesn't happen enough. So you need to find, and you know what I'm saying. I see your smile. You got to find a couple of other simple patterns and study them, and own them. And you're set. you're set. So anyway, I know I went off on a little tangent there, but I don't know if you can tell, but I'm kind of passionate about it.
Let's look at some charts.
Yes,
So
sir.
what you got any preference here? So I think we're looking at four names. Anything that
Sure, you
stands out
pick
you
it and
want to
we'll do
start
it,
with?
sir.
All right, let's look at ZIM, ZIM ticker symbol.
Okay, I got it right here, my friend.
So walk me
Um,
through what you were looking at on this.
okay, good question. If you're looking at ZIM and the ticker symbol ZIM, something I like to do, folks, I like to do, and it sounds corny, I call it how to build a case. All right. You all know the fundamentals and the technicals of super stocks. And if not, what I've discussed with you will help you, or what we talked about earlier. Leading groups, the things that I read to you, leading groups, great charts within 20% of 52-week highs, great earnings and or great sales, a high composite rating, and a clean and simple chart pattern a sixth grader could see and understand. And I'm not kidding. Simple, simple. And here's why. If everybody sees what you see, it means it increases the potential they will buy also. I know I say that a lot, but I can't stress that enough. And how's that reflected? How do you know they're buying, folks? Well, it's simple. It's volume. You want to see volume surges. So we're looking at ZIM right there, pushing through this spot, pushing through that line. You see that clean and simple base I drew on there, Evan, with the white line? Just a simple line going through around 2173, 2173 a share. As I said before, people talk with their mouths and vote with their pocketbooks. You take a look when it pushed through that line, through 2173, look at the volume surge. The day before, the stock did 620, I'll call it 630,000 shares. On the pivot day that it pushed through, 1.5 million? 2.5 times what it did the day before. As I said, people talk with their mouths and vote with their pocketbooks. Folks, they voted. There you go. And it runs. Now, let's address this. The market gets a little squirrely. This is more of a growth oriented stock. All right. By the way, on the chart, it says so. This stock, how do we build a case? A plus rated group. Relative strength was leading in a new high ground. Last quarter, the earnings were up 99%. Last time I checked, that's pretty good. That's pretty good, isn't it? That's sweet potato pie. And as I said on the chart, how we build a case, it pushes through there and it just runs. Now, did we sell a little bit into strength? Yes. Why? A couple of reasons why. It's more technology oriented, all right? And tech stocks have been really weak. And it's a new issue based setup. New issue based setups are not as reliable. So by default, what do? We sold a little bit off into strength. What does that do? As we discussed earlier, it guarantees a profit. This thing can come back to my price and I made money. No matter what happens, I'm going to make good money. But more importantly, it allows me to let those other shares ride a lot longer. There we go. There's the first one for us.
That's awesome. Yeah, I love the concept of scaling out into strength because it just accomplishes so much. It puts the money, in your account. It locks it in. It helps you just sleep easier at night. It prevents the anxiety. It's such a good approach. So yeah, that was great. Let's look at Google. So Google
Sure.
here looks like it's moving sideways. What are you seeing in it right now?
Great question. So we're looking at this chart, folks, and you see the white line that I drew up there across those tops. It's relatively clean and simple, but it's not perfect. Why? You can say, well, Patrick, that's a clean, flat line. I think that's really good. I agree, but note something. We always need to control risk when looking at the chart pattern. Do you see the travel range in those bars? That first red bar where it rallied up to the white line and then it closed near the lows? That's a pretty wide and loose bar, folks. What's the one saving grace on that bar? It fell on less volume than it went up on the 2 days before. That's powerful. That's connecting price and volume together. So then it has that huge drop down bar on 3.8, but the volume wasn't as heavy as it went up. And then it went sideways. And then it goes right up. Isn't this ironic? Do you see on March 11th? Where does it go up to, folks? That's the next bar that touches the green line. It goes right up to that line. And what's it do the next day? It gaps down. As I said before, charts are a reflection of psychology. That stock stuck people on March 8th, that first red bar, and then it rallies back up. Do you think there were people that bought it on March 8th near that white line and watched it drop all the way down and go, good Lord, what's happened to me? I'm getting killed. And what do, folks? A chart's a reflection of emotions. It goes back up to the white line. And you know what people say? Ethel, thank God, guess what? We're at break even. We can sell it. And they did. And it's reflected the next day. That sucker gaps down. It's just emotions. All right? That's all it is. You like that, Evan? Is that pretty good? So then it meanders for 2 days. And then what's it do here on the 16th? It rallies right back up to that white line. And what's it do? It backs off again. Now, that might be a function of a rougher market, okay? But more importantly, it's telling you there's a seller up there. How do I know it? Because I look at the chart. There were people that got stuck on March 8th, and there were people that got stuck on March 11th. They got stuck and said, it's back near my price. I can protect my ego and pocketbook, and I'll sell. One thing we need to do, lose the ego. Lose the ego, protect the pocketbook. When that thing was starting to drop on that first down red bar, smart investors would have been out long before that thing fell all the way down from basically 2113 and hit a low of 2005 that day. I don't even need a calculator. That's 100 points. And this is the other thing I'm going to say too. Maybe I'm on a soapbox here. I'm just going, well, percentage-wise, it's not much, Pat. It's really relatively small. Hey, 100 points is 100 points. I don't give a rip what the price of that stock is. I don't want to be down 100 points. So manage it accordingly. It just makes it easy. The way we sleep at night. Now, let's take it a step further. You see the white line I have up there, folks? You see that little green slash mark over by 2110? You know what that is? That's a price alert. If this thing thrusts through that price and the market's good, by Jove, that's a buy. But I put 2 constraints on there, folks. It thrusts through that line. I put 3 on there. It thrusts through that white line, and it does it on good volume, and the market's acting okay. All 3 constraints have to be met, or we don't buy it. And this isn't rocket science. This isn't fancy. We're not sending men to the moon, or women. They're just looking at the chart saying, here's what it is. Anyway, so guess what? We're ready for it. You think that'll be on the key list tonight? Yep. For tomorrow? Yep. If the market's good and this thing lifts off, I want to buy that stock. And it is a MAXLIST stock. I love them. So there you go, Evan. Rock and roll, buddy.
Thank you for listening to Smarter Trading. I hope you enjoyed this week's episode. For all of the show notes, links, and callouts, head on over to thetraderisk.com/podcast. If you enjoyed this episode, please leave us a rating and review on iTunes. Smarter Trading is hosted by me, Evan Medeiros, and produced by Ashton Alexander. Thanks for tuning in, and we hope to see you in the next episode.